let's start with the stress test. I know you had a big role in that. They did not put a floor under assets, clearly. We're in a situation where we're seeing banks bearing the brunt of the selling, particularly in Europe. Why not?
Well, the stress test looked at a number of factors, and in particular capital holdings. And the European Banking Authority, which was responsible for the stress test, failed a number of banks and listed a number of banks which did not fail but were close to the cutoff point and were heavily exposed to sovereign debt, distressed sovereign debt. So we think that the job was done well.
Christine Lagarde, who is now managing director of the IMF, said in a recent speech that she would like to see there needs to be urgent recapitalization of the banks. I know that the European Commission has put out a statement afterwards, but do you agree with that?
Well, I agree with the European Commission statement, of course.
Where did that come from?
The banks have, there has been a considerable recapitalization of European banks. The stress tests were done on that very issue a few months ago. That capitalization process continues, and we are confident that that will continue to be the case.
But what about the recent market concerns, the flare-up? Do you think it's overdone for targeting the banks?
There are concerns across stock markets in Europe, and the banks indeed have been hit, but so have a lot of industrial companies.
Bank CDSs are at a record high today in Europe. It seems a little overblown if, the capitalization concerns that you're talking about are being addressed.
Well, capitalization is not the only issue being reflected in those developments. And banks will be reacting to that, and we expect them to do so.
Those betting against the banks?
Sorry?
Those investors betting against the banks?
No, the banks will be considering market sentiment and, of course, the regulatory requirements that are being made of them in taking their commercial decisions.
Another reason for the selling is being attributed to short selling bans that have been implemented in several countries, but not others. That, for instance, you cannot sell short financials in Belgium and Italy, but you can in Germany. Is this discrepancy harmful, do you think?
Well, we would certainly like to see a uniform position on short selling across the European Union. We have made legislative proposals to that effect, and we hope very much that they will be adopted soon, and then we will have one set of rules and mechanisms for short selling across the whole of the EU.
Does there need to be an EU-wide short-selling ban on financials?
Not necessarily an EU-wide ban. There needs to be an EU-wide mechanism involving the national supervisors, involving the European Securities and Markets Authority, where decisions can be discussed and taken.
Is there a liquidity problem in European banks?
Well, there are liquidity issues in banks. The Basel agreements have provided for a mechanism to monitor and then to bring in rules on liquidity. There are already, of course, in each of our countries regulatory and supervisory arrangements in place for that, and we think that system is working.
But you have Josef Ackerman saying that he says the current crisis is reminiscent of 2008 with respect to the concerns in the banking industry and the liquidity problems.
I heard he said that.
And how would you respond? I mean, clearly, is it as acute to you as 2008?
I'm not going to make a judgment on that. 2008 is not 2011. Circumstances are different. A great deal of work has been done by the banks, by the regulators, by the supervisors, and internationally since then. So we're not in the same environment as we were in 2008. We know a lot more, and banks are a lot more robust. That doesn't mean that there aren't problems that still need to be addressed, but there are ways of addressing them.
So the banks are in better off shape than they were in 2008?
Oh, a great deal.
Would there be any sort of mechanism for rescuing the banks? I know in July it was floated the idea of using the EFSF to help capitalize banks via loans to countries, correct? Has there been any progress on that?
Well, there are various mechanisms which are used to deal with banks in difficulty. We are working on a resolution framework for that very purpose. So is the international community more generally in Basel. And meanwhile, our individual countries have their own systems in place. We will move as quickly as we can towards a common European system of resolution of banks in difficulty. We hope that all the other measures that will be taken before we get to that stage will succeed.
Like what?
Well, we hope that banks will not get into difficulty because their capitalization, liquidity, the things that we've been discussing, will improve so that resolution as a last resort is not necessary.
But in the case, if the investors demand something like a TARP for Europe, like we saw in the United States, is that plausible?
Well, that is not demanded, and a particular mechanism used in the United States would not be just translated across the Atlantic. I don't think there's any prospect of that.
Another issue I wanted to ask you about that I've heard Michel Barnier comment on, the rating agencies exacerbating some of the problems here. Is there still an effort that your commission is taking to try to deal with that issue?
Yes. There will be new legislation proposed in the autumn on credit rating agencies to improve the way they are supervised and the way in which they operate. There have been concerns expressed about some of the ways they operate, and indeed whether there is whether a sufficient number of credit rating agents to provide for a genuinely competitive market.
Regulated how?
Well, there's a whole registration mechanism. There are certain criteria that have to be met for registration to take place, and they will be tightened. And the new European Securities and Markets Authority, ESMA, will become the supervisory authority.
Do you think that the rating agencies made the problems that you're experiencing in the bond market, in the credit markets, worse?
Not necessarily. They have a job to do. I think the real problem, one of the main problems in respect to credit rating agencies, is that we take them too seriously. That too much reliance is placed upon their work. They are one source of information among many others, and governmental authorities and many investors who should be forming their own judgment should do so without over-reliance on credit rating agencies. And we will seek to reduce that reliance as far as possible. Is this a sovereign crisis now or a financial crisis in Europe? There are issues in both areas, quite clearly. If you look at the problems in some of our individual countries, the problem in Greece is very different from the problems we had in Ireland. So there are elements of both.
One of the things recently that gave investors confidence in Greece was the merger that we saw between the second and third largest banks. Do we expect to see that more in peripheral countries?
Hard to tell, and it's certainly not our business to encourage or discourage. Our only role in that area would be in the field of antitrust law if various thresholds were met. There have been a number of banking mergers across the European Union in recent years. We are certainly concerned to see that there is sufficient competition in all of the banking markets, but otherwise that's a matter for the institutions concerned.
But is there anything else on the table that you're working on that could help stem the contagion from the sovereign debt issues to stop it from spreading into the banking system as we've seen in the past few weeks?
Well, it requires a sustained effort, which I think is taking place by the banks themselves to get their affairs in order, by the regulators and supervisors, and of course by the governments responsible for the sovereign debt. There is no one single measure that can solve all of these problems overnight. But there are a whole series of measures underway, some in force, some still being considered, in our no doubt complex democratic system across 27 different countries, but that's happening. I'm confident it will work.
And in 1 year, the European banking system, how does it look different? than today?
In many respects, it is healthier because recapitalization has taken place, management has been improved, regulation and supervision are in the course of being improved as well. And we've all learnt a lot about the problems which banks have faced, and the banks themselves and those responsible for policy applicable to them have learnt a lot as well.
And do you worry about their exposure to the sovereign debt at this point?
Of course there are worries. We would like to see all of our banks restored to full health as soon as possible. That's very much in the interest of the general economy, which banks should be serving. Yes, exposure to sovereign debt is obviously one of the issues facing the banks.
But you don't think that investors are overreacting at this point?
Not for me to say whether investors are overreacting.
Well, are markets functioning normally?
Markets seem to be functioning normally. There can be overruns and there can be reactions followed by correction. That's the way markets have always functioned. It's not for me to comment on their wisdom. My job is to make sure that we have the regulatory systems in place across the EU, where banks are so interconnected these days, to respond to the challenges facing.